Good day, trader. Stacey Burke from Stacey Burke Trading. Today, just having a brief discussion about the 3-day cycles and 3 levels of rise or fall. The counting the days is, roughly a basic strategy. And just to really reinforce the number one thing right off the bat is, for me, everything needs to be simple, meaning that my approach is simple. It's not complicated. If I can't see it, if it's not simple and I don't see the simple setup, I look at something else. It's just literally that cut and dry with me. So I know there's a lot of people out there. They send me emails talking about liquidity purges and order blocks and different things can confluence and I'm not. I'm just trying to reinforce that I have pump and dumps, dump and pumps, trend trades. And essentially the pump and dumps and dump and pumps can be reversals, they can be session trades, they can be, a first red day, first green day, high a day, low a day trade for large moves, usually after 3 sessions. So again, just reinforcing that everything is simple. I'm just coming to the screen and looking for the most simplest setup over and over again. And last night, we'll talk about the S&P, we'll talk about the oil trade. But just reiterating, everything has got to be simple or I won't be able to duplicate it. If you have all these little minute things that you have to identify and find and label and blah, 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 there are people who really resonate and their personality, their level of expertise in that niche is, what they need to do. For me, my approach is really simple. I'm just looking for 3 levels, consolidation and a reversal, stop hunt, whatever you want to call it, or I'm looking for 3 days, consolidation, drop, trend, whatever that may be. So just keeping things simple, even just going back and looking, peak formation, we have a big down date. You can start the count, day 1. Day 2, it doesn't go any further down. Day 3 is the beginning of a new week. Day 3 on the downside is the beginning of a new week, and we're at the bottom of a 00 box. So a new box at a new week. And so I start my count again on this day. There's a trade in Asia, obviously. There was an opportunity perhaps in Asia. So just coming back to some basic concepts. At the end of the U.S. session, where is the consolidation? Just like really simple stuff. Really simple stuff. If there's a consolidation at the end of the U.S. session and they give me an opportunity into the new window in Asia on a pound yen cross, on an index, on oil, something like that, again, this may be just a simple scalp opportunity, but it has to do with the consolidation. So we go back and this market, this is a classic example of day 1 flipping the book. Some people ask me what I meant by flipping the book. Well, this is a down move. The market's following through. They're trapping people down low. And again, you'll notice there from where the move started, the new 00 box and 50 pips below. There's 150 pips, 3 levels of drop, 50, 50, and 50. But just in simple terms, whenever I start my process, no matter when a session begins, you're not in a 750 pip box. You're in a 100 pip box on one of these levels. So, people say, well, it can be 250 pips. And yes, it can for the day's high and low. But when the session starts, you're in a 100 pip box. So when we start the U.S. session, not to say this is a trade, but we're in the lower level 1 of a 100 pip box. Forget this. They've already gone down and done their work and locked in the peak formation. So if this is going to do anything, I'm going to be buying low, buying at the bottom of a 100 pip box. Day 1, level 1. We go into day 2. Now, day 2 is the most common day for me to look for a trend trade. And I want you to think about, again, what's happening here. If I'm looking for 1, 2, 3, and I'm looking for volume to be trapped after 3 days, 3 levels, and we can just switch over to the New Zealand dollar real quick and just to emphasize this. Again, just looking for simple stuff. So if we come back to this week, Last week, on Thursday, the market turned off of 50. Friday broke the previous day's high. That can be day one. Day one is the reversal day. Day two is the day that breaks the new high going in the opposite direction. So if we just come back here, we came down day one, day two, day three, it forms a low, and the next day takes out the high. So we have a day one going the other way. The first day being the day that forms the low. Day two is the day that breaks the high. Day three, Monday. So people have asked me, I know this was confusing for some people. Day one is always Monday for me, but it's day three of the move. And we have a market that broke Thursday's high on Friday. So again, understanding that's the high. They broke out, but it's struggling to go any higher. So they might be locking in the high, but also they're sitting on top of double zeros for 1, 2, and a third day on Tuesday. Day one of the new week, but day three possibly in the move. We have a breakdown in structure. The market breaks down and peak formation back up into that high for a move back down. That's the same as 3 levels of rise. 1, 2, 3 levels, consolidation, breaks down, goes back up in, peak formations are up. This is a low-hanging fruit trade in the U.S. session last night. Why? What do I mean by that? Well, it's come out of level 3 and it's going back down to the lows. So the trade in the U.S. is just the follow-through on a market that's already shorting down. So again, 25, 25, and 25, consolidation, locking in the high. So that's a failed breakout. They're just trapping volume up on the third level before reversing. Same trade. Now there can be variations in this. We have day 1, day 2, day 3 last week on the S&P. Day 3 trades down to the bottom of the double zeros. That's 1,000 pip box. And goes vertical on day 3 back to the high of the day, high of the week. That's possibly a reset. A reset. Now we start the count again. Day 1, day 2, day 3. They put in peak formation lows and continue into Friday. So this is coming into the new week. We look at this and we're going, okay, that could be the new count. Day 1, day 2, day 3. Day 3, they hit the high of the week last night. Now, just looking at this pattern from the S&P, the 2 days, talked about peaks and reversals at the high of the week, low of the week, triple top. The volume is up above the double zeros. Same thing happened last week on oil, but it's a different subtle variation. We have our triple top on day 2. So same subtle variation, but the same pattern. Consolidation at the end of the U.S. session. Below the peak formations. Consolidation for the trend trade out. Peak formations. New York Open goes vertical, triggers the high of the week. Short traders, high of the day, short traders in the market up top for the trending trade back down. So we have day 1, day 2, day 3, possibly now starting the move back down. Now, I have no idea what this market's going to do. It could come back up and roll over. 3 peaks for a short trade. We have first red day. Yesterday was first red day. We have volume trapped, 2 days of volume trapped above the double zeros. This is 1,000 pip box. We're now down at level 1. So if I was looking for a short trade, I'd like to see them possibly come back up, at least up to the middle of that box into the third level for a possible continuation down. It may not. It may put in peak formation lows and start the move back up. No idea. So last night I took a short trade on the S&P at the open of the U.S. window. So again, just simple concepts. We have a creeping trend back up inside, back up into the 4th level. So we have 1 level, 2 levels, 3 levels of rise, a peak formation stop hunt. Why do I call that a peak formation stop hunt? Because they hit the lower highs of the London session. It breaks down prior to the window opening. Somebody said, why didn't you short it at 75? I have no idea. This market could have continued to go. That's not my strategy. I'm not trying to sell the high or buy the low. I'm selling the high after they lock it in the timing window at major round numbers with the thesis that it's going to go vertical back down into the low-hanging fruit. Now, it's not just going to stop here. It's going to put pain into those traders, and it's going to trade back into long traders who are long at the low of the London session. Now, again, my approach is to take money out. I'm not worried about getting every last pip. So when I get a 75, 100 pip move in that first 45 minutes to hour, knowing that New York is not open and that can do anything when the New York market opens, I'm happy to take. That's my trade setup right there. 3 levels of rise, lock in the high, drop it down, break structure, M structure inside of the peak formation. Thesis being it's going to go vertical back through the creeping trend to hit the stops. This is shows up over and over again on any instrument. It may not go 100 because the volatility will be different instrument to instrument. Oil, we have Monday, Tuesday, day 1, day 2. Day 3 goes vertical in the direction of the trend. Triggers the high of the week. Puts in a micro triple top. Closes back inside of that first burst through the high of the week. We take a position in here. People are focusing on candles all the time, and I keep reiterating, once your thesis is confirmed, get in. Put your stop in place. 20 pips. Thesis being, it's going to go down. It's gone up 3 levels. It should go back at least to the low of the consolidation, which takes it to 50. Again, putting 25 to 50 pips into the traders that maybe are long, either at the breakout of the high of the week or in this first bar trade. Maybe they haven't taken money off, whatever that is. Now this market kept going. It's okay. I don't care. I'm happy to take this and get out and be done. Could I have left a trailer in? Absolutely. Could I have got back in? Absolutely. Again, these are decisions you can make on the day. It can be part of your pre-trade thesis. Where you want to size in. You could add size in on this second move down. Whatever you want to do. These are all the things that you can decide for yourself. But just in terms of simplicity, day 1, day 2, day 3. Day 1 could be flip the book, narrow range. It could be a runner. It could be a trending day. Day 2 could be a second push through that high, or the trending day itself. Day 3 blows off in the direction of the trend, and in this particular case gave a perfect reversal. Okay, it's locked in the high for a move back down. Is it absolute? No, that's why we put a stop in place and a profit target. Could it have put a low in and came right back up? Absolutely. Again, I take profits. Entry, stop loss, take profit. That's simple. This is a setup. Execute the setup. You're done. You walk away from the screen. You don't have to sit here for hours and hours and hours scalping in and out to get pips. Learn how to size up on these trades. They show up everywhere. Somebody asked about gold. Again, yesterday, gold, had it come back up into this third level in that U.S. window somewhere above 50 to 75 before breaking down, then I would have been looking for something possibly in gold. But it broke down first for the sell. And as you can see, we're selling lower and lower down in the lower half of this range, which the only time I will look at doing that is if we're on a first red day after we've gone up 3 levels, 3 days. Now this is a reversal, and we're jamming in the low of Friday down in this 00 area. So this type of price action, I really don't even look at it. I wasn't even looking at gold because it broke down instead of pulling back up. Had it pulled back up or even come down and started to go up prior to this at 50, I possibly would have been interested in looking at gold. But again, the S&P trade was right there in the window, 3 levels of rise, break in structure, sideways 50s, 50 to 50 for the 100 pip drop. Now, when this sort of scenario, we're selling down low as opposed to selling up high after 3 levels of rise. Hopefully that makes sense. Again, similar euro, different variation. We're in a 100 pip box. Level 1, level 2, level 3, they go vertical on day 3, day 1, day 2, day 3, pull it back and go stop hunt up into the London session for a sell at the end of the gap just prior to the U.S. window. Again, an example of low-hanging fruit, meaning that if you came in the U.S. session, you're just picking up the second trade short through all these higher lows. Whenever you see this creeping trend, that's an easy low-hanging fruit trade. What I mean by low-hanging fruit is just that's the easy trade. That's the simple trade. Don't fight the trend. It's going down. Trade with the trend. Where do you get in? Well, again, coming back to timing, if you're coming at that right at that window, any pop-up, any vertical pop-up in this window, I would be happy to short. Obviously, ideally, the entry was above the quarter level, but as soon as this session starts, anywhere in here is a get-in area with a 20 pip, 15 to 20 pip stop. And again, you can hold on to this, take money at 25, or just hold it for 50, whatever you want to do. But as we get closer to that timing window expiring, understand that may be where this market may form a reversal back into that move. So again, just coming out of that third level, and if you're not in this move, we're just trading with that continuation following through from the three levels of rise. Just stepping back and looking at that, again, it doesn't matter which instrument I'm looking at. I'm always just, wherever the session timing window is, I'm still in a 100 pip box. It might have moved 500 pips on the day, but at the time of the session starting, I am still in a 100 pip box in one of the quarter levels. If I'm up level 2, level 3, 50 to 75 or more, I'm looking for consolidation or three levels of rise for a sell trade. It's as simple as that. If it's day 2, level 2, I could be looking for a trend trade, meaning that day 1, for example, even in this particular case, day 1 is inside, but we're still in that lower part of the box. Day 2 could be the trend day back up towards the high of the week, level 3. So keeping it simple. If it doesn't look familiar, I'm looking for something that's simple, not trying to read every little nuance, put names on it and scalping it. I'm just looking for setups. I'm looking for three levels of rise, three levels of fall. I'm looking for consolidations and trend trades. It's as simple as that. So hopefully you got value from today's video, traders. Keep it as simple as possible. Whatever setups resonate best with you, and then look for the instrument that shows you your best setup. Have a great day, and may the markets go with you.